What's up, you guys? Welcome back to the channel. So in today's video, I'm going to go over why you may want to consider buying the dip that NIO is currently experiencing before they possibly race all the way up to $100 a share. And towards the end, I also might give my prediction on when I think NIO could hit $100 by. So make sure you guys stick around to the end. But before we actually get into the video, for those of you who are new here, my name is Evan and I make videos showing you guys different ways to make money in the stock market. So if that interests you guys, make sure you subscribe and hit the notification bell so you never miss when I upload. Also, if you guys wouldn't mind going down and hitting the like button, I would really appreciate it, and it lets me know that you guys enjoy these video updates every day. But with all of that out of the way, looking at NIO's share price today, they're actually up over 5%. Now, if you guys have been paying attention to NIO the last couple days, you know that they've actually pulled back quite a substantial amount. Now, this wasn't just NIO, but it was actually a lot of EV stocks and a lot of tech stocks as well. And there was actually a lot of concerns in the overall market that all these huge increases that we've seen aren't sustainable. And so a lot of people have been taking profits, and there's been drawing concerns about different events that have been happening. So to see NIO up over 5% and they're actually trading right under $52, I think it's a good thing to see them bouncing back pretty positively when we compare today's trading to Monday and Tuesday. Because on the 1 week chart, NIO is actually down 6.5%. And again, they're trading right under $52. But you can see on Monday, getting close to market close, NIO had a huge dip and they actually lost about $8 on their share price. Now they did kind of recover on Tuesday, but they weren't quite up to where they were trading at when you compare that to Monday earlier in the trading day. But the reason why today's trading is so big is because they're actually getting back to where they were on Monday before that big dip. And like I said, NIO wasn't the only one affected. A lot of these EV stocks that a lot of people pay attention to, they all saw a very large decline. And of course, one of the driving factors is Tesla. Because if we actually look at Tesla's share price today, they're up right over 5% as well. And you can see that their chart, when you compare it to NIO, is pretty much exactly the same. And I'm sure most of you guys know that these smaller EV stocks really follow in suit, because Tesla is kind of the benchmark when it comes to EV stocks. And they really set the tone for how these smaller stocks move. And even on the 1 week, NIO and Tesla look pretty much identical. And again, this is because NIO follows Tesla so closely, especially when there is big moves in the market. If Tesla drops a substantial amount, we're going to see that reflected on NIO and a lot of other smaller EV stocks. But I don't think you guys came here just to look at the comparison between NIO and Tesla. You guys want to know if you should be buying NIO stock right now while they are lower than normal. So I'll give you guys some information regarding NIO's share price and what could possibly happen in the future. And then I'll let you guys decide if now is a good time to be buying and adding shares to your portfolio. So the first thing that I want to start off with is that near-term weakness is actually a long-term buying opportunity for NIO stock. I'm sure a lot of you guys believe in NIO stock, or you probably wouldn't be watching a video like this. And a lot of people know that electric vehicle companies are going to be the companies of the future. And we're already starting to see that because lately there's been a big push towards green energy, and EV stocks really do help with that. Now, there is definitely an argument on how green they are to produce, but the concept behind electric vehicles is very good, and it's supposed to be good for the planet. So we know with all these pushes, especially like China wanting to get rid of gas-powered vehicles by 2035, and then California also wants to do a very similar thing. Well, it doesn't take a lot of knowledge to realize that electric vehicles will be the only vehicles on the road at some point in the future. Now, whether that's in 15 years, 20 years, or 30 years, eventually it's going to happen. And while a lot of these stocks are pricing that into their share price, I don't think they can really price in how big electric vehicles are really going to be. I mean, just in 2020, NIO started the year at $4 a share, and then by the end of the year, they were up to $50. And this marked one of the best years for any stock in recent memory. But of course, we know that stocks don't just go up in straight lines. And since 2021 was a strong start for NIO, especially with NIO Day right at the beginning of January, NIO shot up to some new all-time highs, and now they've lost about 30% of their value over the past 3 weeks. And this is due in part to a lot of general fear in the market about rapidly rising interest rates. And this isn't the only thing. There are also concerns about stimulus and how it's going to affect the entire economy. But with this big pullback, a lot of people agree that this is a buying opportunity for NIO, because even though NIO was valued at about $90 billion for their market cap before this pullback, And while that probably was taking into account future growth for the company, I think a lot of people would agree that NIO still has a long way to go, and they still could run up quite a substantial amount, not only in the next few months, but in the next year. And we could see a huge increase just like we saw in 2020. And if you guys are at all concerned about NIO, just take their delivery numbers, for example, and look at that and compare it to previous months. We know in January, NIO delivered 7,225 vehicles. So when you compare that to other auto manufacturers that are producing normal combustion engines, it really doesn't seem like a large number. But for NIO, that was actually a 352% year-over-year growth when you compare it to the previous January. And while that seems like a huge increase, the better news is that NIO's January deliveries rose 3% month over month. So this is comparing January deliveries to December. And the reason why this is so big for NIO is because December deliveries are usually enormous thanks to holiday demand as consumers are rushing to buy new cars for Christmas. And then after December, deliveries usually fall off a cliff in January, and then they ramp up through the end of the year. So the beginning of the year is typically the smallest, and it just gets bigger and bigger throughout the year. Now you could argue that NIO is different and they have the Chinese New Year, and a lot of people probably buy vehicles for the Chinese New Year. Now I don't know if this is actually the case and if the Chinese New Year is a time for giving gifts, but if you guys know how the Chinese New Year works, let me know down in the comments, because I would be curious to know if these January deliveries were due in part to the Chinese New Year. But there was actually something big that NIO released, and they allowed customers to put 0% down for their vehicles. And so this probably was one of the driving factors that helped boost up their sales in January. And I wouldn't be surprised to see their February numbers competing with January as well. Of course, February is a shorter month, but with the 0% down payment for new customers, I believe that went through the middle of February. And then if people do buy vehicles for the Chinese New Year, again, I wouldn't be surprised to see their February deliveries compete or even exceed January. So while this is just kind of a quick recap of what NIO's done recently, it does show you that they're not just sustaining their business, they're actually increasing momentum, and they're actually building on it consecutively month after month. Now for the fundamental and technical side of things, I think anything below $60 for NIO right now indicates a very strong buy point, and NIO definitely has a long growth runway ahead of them as they start turning into a global dominant supplier of premium electric vehicles. And this is with a healthy margin profile thanks to falling battery costs and strong pricing power. Now NIO is not the only one benefiting from falling costs for batteries. A lot of these other electric vehicle companies are going to benefit as well. But the fact that NIO is already so far ahead of these smaller EV companies, they definitely have an upper hand when it comes to expanding. And we know that NIO wants to expand to Europe, and they're planning to do so by the end of the year. And that's another positive catalyst that really should push up NIO's share price, because once they start expanding outside of China, even though China is a huge market and they've really only made a dent in China, I think that expansion outside of China, showing that they can expand worldwide, it's going to gain a lot more interest in different investors around the world, and it may position them as one of the top auto manufacturers in the world. Even though I believe right now NIO is ranked number 3 behind Tesla and Toyota in terms of market cap. Now, of course, if you were to compare NIO to these top auto manufacturers in terms of deliveries, NIO wouldn't even be anywhere near the top 10 even, but that really does show you how big EVs are going to be in the future. And again, I think anything under $60 as of right now is a good buying opportunity. And I think likely with all these analyst predictions around $70, NIO is probably going to climb up to that $70 mark in the near future. And based on their earnings potential over the next decade, I think it's realistic to see NIO racing up to $100 in the foreseeable future. And as I've done in previous videos, if you compare NIO to Tesla and you look at how Tesla's increased not only in their market cap, but in how many vehicles they put on the road, if NIO was to do a similar thing and say they were to put out about 160,000 vehicles by the end of this year, now that would be a huge amount of deliveries for NIO, but as of right now, they're already over 7,000 in January, which should be the smallest month, at least for most auto manufacturers. And to get up to 160,000, that would be an average of about 13,300 vehicles per month. So that's definitely a stretch, but if NIO was to do that, that would position NIO at an equal market cap as Tesla was at a couple of years ago, and that would bring their market cap up to almost $200 billion, therefore bringing their their share price up to $100. But with that said, another thing in terms of the technical side is that NIO stock is rapidly closing on their 100-day moving average, which is $45. And this is a level that the stock has held ever since their big breakout from $4 back in May of 2020. And it's not very likely that NIO is going to break below that 100-day moving average and hold that. Now they could break below it, but I don't think they would stay there for too long. And so with that considered, I think anything between $45 and $60 is a good buy as of right now. And this is taking into account where NIO could be in the future and what they're going to do over the next year in terms of expanding their business and really upping their deliveries. Because if NIO doesn't really do anything over the next year, their stock is going to stagnate and they're really not going to go anywhere. So this is taking into account what NIO has in store for the future. But I want to hear what you guys think down in the comments and where you think NIO is going to be trading by the end of 2021. Personally, like I mentioned, if NIO does deliver about 150 to 160,000 vehicles, I think they will be trading at about that $100 share price. But again, let me know down in the comments what you think NIO's share price is going to be by the end of 2021. Also, if you guys haven't signed up for Webull, make sure you guys sign up using the link in the description. And when you sign up and deposit $100, you'll get 2 free stocks just for signing up and depositing money. And if you guys want to join the Discord, make sure you guys sign up using the link in the description, or you can also use the top pinned comment down in the comment section. And if you guys enjoyed the video, make sure you leave a like because it really does help out the channel. And with that said, thank you guys so much for watching, and I'll see you back here in the next one.